Hello guys, welcome to NEH Nikita's Educational Hub. Get your share of prestige. This is Nikita. In this video, we are going to learn about accounting process. So let's get into the topic. Accounting process. Accounting is the process of recording, classifying, summarizing, analyzing, interpreting, and presenting the financial transactions of an organization during an accounting period. It is a complete sequence of accounting procedures which are prepared in the same order during each accounting period. The business organization has to record the transactions, classify them into ledgers, and summarize them into trial balance, profit and loss account, and balance sheet for the preparation and presentation of the financial statements. This process has to be repeated by the organization for each and every year. Every business has numerous transactions each day. Unless they are recorded and analyzed, it is not possible to determine the impact of each transaction in the two basic financial statements such as profit and loss account and balance sheet. So in order to know the financial performance of the organization, the whole accounting process is to be done. The various steps of the accounting process are identifying, recording, classifying, summarizing, analyzing and interpretation, presenting or reporting. Let's know about these steps one by one. Identifying the transactions. A business transaction is an event which can be expressed in terms of money and which brings change in the financial position of a business enterprise. An event is an incident which may or may not change the financial position of a business. Therefore, all transactions are events, but all events are not business transactions. The incidents which occur in the business are called events. An event may or may not be expressed in terms of money and may or may not change the financial position of the business. So, a transaction is an event which can be expressed in terms of money. So, an event which can be expressed in terms of money and which can change the financial position of a business is known as a business transaction. Hence, all the transactions are events, but all the events are not business transactions. Let us discuss it with an example. For example, Mr. X started a business with a capital of rupees 1 lakh. Here, X brought a capital of 1 lakh into the business. In this transaction, we can say it as a transaction. Why? Because here money is involved of 1 lakh which is brought into the business. As the money is brought into the business, which is called as capital, the financial position of the business has been changed because in the balance sheet the capital of 1 lakh is showed here. So we can say this is a transaction which has a monetary value and which changes the financial position. Let's go with the next example. Mr. X appointed Mr. A as an employee on a salary of 10,000 rupees per month. In this event, this is called an event because here we do not see any amount involved. You can say that 10,000 rupees is there, but you will pay this 10,000 rupees when it is paid only at the end of the month. As of now, we are just recruiting an employee. It is an event, and because of the recruitment of the employee, the financial position of the business is not changed. Hence, we can conclude that this is an event. Transactions may be of internal or external. So let's see the examples. Purchased goods worth rupees 20,000 on credit. Here we are purchasing the goods from the vendor on credit for rupees 20,000. This is an external transaction because here involves with the second party, that is the vendor. The next example is depreciation charged on the machinery rupees 5,000. In this example, no party is involved and it is called as internal transaction. The next step of the accounting process is recording the transactions. Journal is the book of original entry or prime entry in which all the transactions are recorded date-wise and presents a historical record of all monetary transactions. It is further divided into sub-journals also called as subsidiary books. So, once we identify the business transactions, we are going to record them into the journal, which is called as a book of prime entry. It is recorded according to the date wise so that we can have a reference in the future. The journal is divided into sub-journals, which are also called as subsidiary books. So the next step in this is classifying. Accounting is the art of classifying the business transactions in which all the similar transactions related to a person, a thing, expense, or any other subject are grouped together under appropriate heads of accounts. So, once the recording of the transactions has been completed, we are going to classify them into the various ledgers according to their similarities such as person, a thing, or an expense. Summarizing. The business transactions which are classified into various ledgers are used for summarizing into various subgroups and preparation of trial balance, profit and loss account, and balance sheet. Once we classify the transactions into the various ledgers, we are going to summarize them into various subgroups and which is used for the preparation of trial balance, profit and loss account, and balance sheet, which are the financial statements. Analysis and interpretation. The financial information or data as recorded in the books of accounts must further be analyzed and interpreted to draw useful conclusions. Thus, analysis of accounting information will help the management to assess in the performance of business operation and forming future plans also. Once the financial statements are prepared, they are analyzed and interpreted by the management of the business in order to know the financial performance and in order to plan for the future also. Presentation or reporting. The financial statements which were drawn from the books of accounts are presented and reported to the end users who are called as the stakeholders for their decision making. The financial statements are not only used by the management of the business but also used by the external parties to the business such as stakeholders of the business in order to make the decision making. The stakeholders may include employees, vendors, customers, government, investors, etc. Thus, an accounting process starts from recording of the business transactions of monetary value till the communication or reporting the financial statements to the interested parties. This is all about the accounting process. Hope you understand the concept. If you have any doubts, please do it in the comment section. If you have enjoyed my video, please do like, share and subscribe my videos. Subscribe my channel. In order to get more notification, hit on the bell icon. That's all for today's video. We'll catch up in the next video. Till then, take care. Bye bye.